Good morning everybody and welcome to today's morning markets. So today what I want to focus in on is a piece of data that came out from the US yesterday, and it's called the JOLTS report. So what is the JOLTS report? So it stands for Job Openings and Labour Turnover Survey. And what it looks at is the number of hires, quits and layoffs. And what it can do is give a more complete picture on what's happening within employment in the US overall. But firstly, why is it important? Why are we looking at this data point? We're looking at it because currently the jobs market is incredibly strong. It's a bright spot in what is a slowing economy in the US. And investors are looking for any sort of clues around how this data set, how employment is changing in the US overall, particularly in light of the high wage inflation that we're seeing. But what happened when the data came out? What were the key points overall? So let's look at the numbers. So job openings rose slightly in July, after falling in the prior 3 months. So up 199,000 to 11.2 million. So the June level was actually revised higher. So it was revised up to 11 million from 10.7 million overall. I think the openings rate, when we look at it, it pointed to stronger demand for labour, as it climbed back up to 6.9% from 6.8% in June. And importantly, it remains well above the pre-pandemic rate of 4.4%. So labour demand held up at a strong level in July after softening in the prior 3 months, illustrating the good health of the jobs market. Companies are determined to hold on to workers with layoffs at low levels overall. A key stat is actually the number of job openings per person who's unemployed, and that's actually risen to over 2. That's a pretty incredible number when you think about the health of the jobs market right now. But just finally, what can we take from this? Well, in some ways, there's really a positive and a negative. The positive here is that people are employed, and if they're unemployed, there are job vacancies available. There's jobs available for them to work overall. That means that people are earning money. It means that they can spend money. It means that they can consume, which is really good for the overall global economy. But on the other side of this is when the jobs market is so strong, you start to see wage inflation coming through. And that's exactly what we're seeing right now. So investors are waiting for a better balance of both demand and supply in the job market as we move forward. That's everything from me. I hope you enjoyed today's morning markets. I look forward to speaking to you soon. Thank you.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.